Today, let's focus on another type of strategy for earnings plays, what happens after the release, what we call momentums or drift. So let's see how we can use data to guide our decisions. So if you trade options around earnings or interested in earnings in general, stay tuned and let's get into it. All right, welcome to this video so today we will focus on a specific strategy around earnings. As you know, we're usually focused on volatility strategies, what happens to implied volatility before the release, during the release. Now let's focus on another aspect, not necessarily focused on the volatility, the implied volatilities of options, but actually on the behavior of stocks after earnings. A good example to look at for last week was CVS that also reported later on this week. And this is what's interesting here is that the reaction that happened after earnings is sort of a classic one that we often see on earnings. And so notice here, we see that visually, and even as we scroll down to the short-term momentum, well, the stock did sort of a zigzag move where it opened with a sort of a somewhat big open, a 6% upward move. But then by close on that same day, it basically dropped the same value, another 6%. So this is the zigzag we're talking about. It seems that the earnings were not so influential or so impactful overall. The stock closed the day at the same level before earnings. And so here we want to ask the question, okay, when this happened in the past, what were the outcomes later on? Does the stock actually stay flat afterwards, or perhaps data will show us another pattern? And so here we're interested in the upper box where we see the similar momentum so far. So here basically we did the math to compare the current moves, so the ones that happened basically on the last earnings of July 31st before market open, and then compare it to previous post-release moves. And this similarity score basically points to, okay, which past releases really resemble the current behavior we see on CVS. And so let's go ahead and see if the zigzag, the stock staying flat after earnings, what does it usually project on the longer term, or at least in the next days after release. So here we see that, okay, the most similar stock reaction after earnings for the current one is the one on November 2nd of 2022. So let's scroll down in that table and try to investigate more into that release. And so we see here right away that, okay, we see why the similarity was found to be quite high. It started even with the first trading day where there was also this zigzag, the stock went up and then went down. But then continuing on for the longer term, basically, we see that, okay, we closed at a stock of 96, and then by the end of the week, the stock basically stayed somewhat flat, very close to that value. Basically, a week later, it was at 110. And as you can see, the moves amplitude are somewhat small. So it seems that at least for that earning, that looks most similar. Again, now we are comparing basically the values that you see here to that same range of past moves overall in the past. And so looking at the most similar one, it seems that, okay, the stock should seems most likely to stay flat. Let's compare to the second most likely or most similar momentum. Here we see it's February 8th on 2023. So again, let's compare it to, let's go ahead and see what does it tell us. And we notice that, okay, there was also this zigzag a bit at open and at close, an upward move and then a downward move. And as we project a bit longer after the first week, we see that the same behavior seems to be consistent, where the stock ended up at $88, so very close to the same 88 basically at close after release. So it seems that data-wise, this flat behavior is consistent when there is this zigzag at open, where the market basically adjusts with an upward move and a downward move, and so ends up at the same level before earnings. Well, that short-term momentum seems to be consistent at least. And so, for example, some of the insights you can take playing this is, okay, perhaps selling condors, selling butterflies to profit from theta decay going into the last days. And here there's no IV crush, there's no any of those IV dynamics that we like on earnings. This is a very simple play, and so this shows you how you can use data to guide your plays after the release when in a somewhat safer environment. Now let's wrap it up by looking at a name releasing next week, and so see how we can basically do this preparation in advance, so even before the stock releases. And so here let's explore Palantir, that will be reporting on Monday after close. And so notice, let's see what seems to be the patterns short term and long term. Notice how this is a very volatile stock, so it has seen many ups and downs over the past releases. Let's go ahead and see how much of a drifter directly it is on the long term. So let's see, after the release is played, as you know, we can do this analysis of the short-term momentum from the similarity that will update as the moves actually happen. But now let's project very long-term and see what happened in the past. Here it's very interesting to notice that most of the table, as you can see, is green, where it seems that for the last years at least, notice how as we scroll back down to 2023, 2022, the color code is quite different. So a lot of red, where the bad reactions or the downward moves on earnings seem to get worse and worse months and weeks and months later. However, it seems that the outlook for the company completely shifted since 2023, where now we see a lot of green. And so not only green, very extensive green that continues whenever there is an upward move on earnings, but actually it seems that even when there is a drop, as we see here in the last earnings, or this earnings in April of 2024, even when there is a drop, it does not consist that much. Usually the stock recovers, and so the drift aspect is very high on the upward move, it seems. And so perhaps this is something to keep in mind, where given if we see a big reaction, a big downward reaction on earnings, chances are it will recover basically. And this is basically the opposite of what we've seen for CVS or UNH, where here it seems that the market really likes the stock. And so no matter what happens on the earnings days, it seems that the recovery or the drift, the upward drift, always wins. Thank you for watching. Hope this was helpful. Make sure to like and subscribe, and see you in the next video.